In the world of gold investing, it's easy to get caught up in the day-to-day price fluctuations, obsessing over charts, technical indicators, and market forecasts. However, a truly successful gold investor adopts a different mindset, one that focuses on accumulating ounces of gold rather than chasing ephemeral price gains. Approaching investing from that mindset will help to ensure success. Shifting your perspective from prices to ounces can dramatically improve your long-term investment outcomes. Welcome back to the Gold Protocol. Today we're exploring the ounces, not prices mindset, explaining why it's crucial for long-term gold investing success, and providing practical tips for adopting this approach. By shifting your focus from short-term price movements to the long-term accumulation of gold, you can build a more resilient and rewarding portfolio. Building and rewarding with your portfolio is what makes it worthwhile. We hope that this gives you better investing guidance and helps you approach gold assets with a different perspective. The price obsession trap, short-term thinking, and emotional investing. Many gold investors fall into the trap of obsessing over prices, constantly monitoring market movements and making impulsive decisions based on short-term fluctuations. Price affects investment decisions and also wealth. Emotional roller coaster. Price obsession can lead to an emotional roller coaster, with investors experiencing euphoria during price rallies and panic during price declines. The constant fluctuation affects emotions and stability. Market timing fallacy. Trying to time the market by buying low and selling high is a notoriously difficult and often futile endeavor. It is a fallacy to try to time the market and control it. Transaction costs. Frequent trading based on price fluctuations can result in high transaction costs, eroding potential profits. Costs are always a factor, and it's essential to know the fees. The ounces mindset. Long-term accumulation and intrinsic value. The ounces, not prices mindset encourages investors to focus on the long-term accumulation of physical gold, viewing it as a store of value and a hedge against economic uncertainty, rather than a speculative asset. This mindset is a powerful way to stay strong in the market. Focus on quantity. The primary goal is to acquire as many ounces of gold as possible over time, regardless of the current price. More investment generates more wealth over time. Dollar cost averaging. Implement dollar cost averaging, investing a fixed amount of money in gold at regular intervals, regardless of the price. This strategy helps to smooth out price fluctuations and ensure consistent accumulation. Having a solid plan for investing and planning with your portfolio is always smart. Long-term perspective. Adopt a long-term perspective, viewing gold as a multi-generational asset that can preserve wealth and purchasing power over decades. It is always smart to look at the long-term picture. Intrinsic value recognition. Recognize gold's intrinsic value as a scarce, durable, and globally recognized asset, rather than focusing solely on its market price. Its inherent value is part of what makes it attractive. Benefits of the ounces mindset. Adopting the ounces, not prices mindset offers several benefits for gold investors. Reduced stress. Focusing on long-term accumulation reduces stress and anxiety associated with short-term price fluctuations. Less stress and anxiety makes for more stable investments. Disciplined investing. The ounces mindset promotes disciplined investing, encouraging investors to stick to their long-term plan regardless of market conditions. Improved returns. By consistently accumulating gold over time, investors are more likely to benefit from long-term price appreciation, regardless of short-term market volatility. Investing provides a basis for returns and success. Greater control. Focusing on ounces rather than prices gives investors greater control over their investment strategy, empowering them to make informed decisions based on their long-term goals. It puts you in a place of control over your wealth. Implementing the ounces mindset. Practical tips. Here are some practical tips for implementing the ounces, not prices mindset in your gold investing strategy. Set clear goals. Define your long-term investment goals, such as wealth preservation, inflation protection, or portfolio diversification. Create a budget. Determine how much you can realistically allocate to gold each month or quarter. Automate purchases. Set up automated purchases of gold from a reputable dealer to ensure consistent accumulation. Ignore the noise. Avoid obsessing over short-term price fluctuations and market forecasts. Focus on physical gold. Prioritize acquiring physical gold, such as bullion bars and coins, rather than paper gold or derivatives. Secure storage. Store your gold securely, whether at home or in a professional vault. By adopting the think in ounces, not prices mindset, you can transform your approach to gold investing, building a more resilient, sustainable, and rewarding portfolio that is aligned with your long-term financial goals. For more valuable insights on developing the proper mindset for gold investing, subscribe to The Gold Protocol. Thanks for watching.